So, I could give you the case. Well, I'm sure we can run through the math of, I think it can do a 10x in the next 5 years.
Today I sit down with Bitcoin veteran and host of iHeartRadio's The Mark Moss Show, Mark Moss.
Now, I've been building and selling tech companies for decades. I'm a partner at a leading Bitcoin venture fund. I'm an officer of a publicly traded Bitcoin company. Now, this is the same mathematical analysis that we use internally to make million-dollar investment decisions, and now I'm sharing it with you.
As he sounds the alarm about the looming U.S. debt crisis.
The government, the U.S. government, the CBO, Congressional Budget Office, lays out the budget for the next 30 years. So through 2054, they tell us what their projected rate of debasement will be.
And based on the math, what that means for Bitcoin in 2030, 2040, into 2050.
And at the rate of Bitcoin's sensitivity to that liquidity, it should push it up to about a per Bitcoin, right? That's that capture about 1.25% of the global store value basket.
We talk what's next for Bitcoin Treasury companies.
As far as Bitcoin Treasury companies, I don't think we're anywhere near a bubble.
Tom Lee and what's next for Ethereum.
You're basically saying that this is the new Bitcoin. You're getting in at a very early stage.
Correct. The question I would have with Tom Lee doing Ethereum, which by the way, congratulations, he crushed it on that one.
And is everything about to crash into 2026?
The end of this cycle should probably be Q4 of this year.
I'm so glad I watched this entire conversation. Hit the like button.
Let's do it. I know you're a Bitcoin guy, so I only want to speak about,
Yeah, what I talk about a little bit, some people try to get me this gotcha once in a while, but from 2016 to 2019, I wrote, one of the biggest cryptocurrency research newsletters out there. And I wrote 1,000 pages of research on those. I was partnered up with Jacob Canfield, if you know who Jacob is.
Yeah.
We ran I had a couple different products, but one we partnered together on called Signal Profits. I'm deep. I was deep in the crypto altcoin space, if you will. It was about 2019, in the LA scene. So it's like Crypto Windy and Brecky and Stash and like all those old school people. But then I was like, after I did all the research, I was like, I'm just going to focus on Bitcoin. So
I love it. And your channel blew up. If you don't mind, maybe I'll keep just that last 60 seconds in and we'll go right into your background.
Yeah. Like I said, I don't mind talking about that at all. I think it's actually really helpful.
Awesome. So you first found crypto in 2016?
Yeah. So I first found Bitcoin in 2015. And then like most people, I then fell into it's not Bitcoin, it's blockchain. That's the real thing here. And so then I chased the blockchain.
Nice. So you thought the true value.
Do you want me to give you the whole story? I didn't know if you.
I would love it. No, please. I would love it. Yeah.
Yeah. So what happened? To give you even a little bit bigger background. So being in California, I got caught up in the .com boom back in the early 2000s. I started internet business in '99. Got caught up in that. 2001, I decided to give it another go. I launched an e-commerce business that it blew up. We crushed it. Had a big exit from that. And I've been involved in building tech companies and investing in tech for a long time. In 2008 here in Southern California, I sold I had two big exits. I had a high-tech medical equipment company that I sold. I had my e-commerce business that I sold. I put most of it into real estate. And in 2008, California real estate got completely wiped out. It lost about 60% of its value in 12 months. And I did everything right, big exits, made a bunch of money, and then just got completely blindsided. It made me, it crushed me. Number two, it made me go, what the heck just happened? And I realized man, I've been really successful with business. I can understand these trends and marketing and building the business, et cetera. But what is this macroeconomic? What is this economy? What is this market force that has all this power over my life, but I'm not paying any attention to? And so I've vowed to my wife and myself that this is never going to happen again. I'm going to go figure this out. So I went deep down the rabbit hole into trying to understand the macroeconomic situation in the world. I quickly understood that we're in a debt-based monetary system. I quickly identified fiat as being the problem and the leverage that got built up in the system, and I became a gold bug. I realized, we need sound money. The fiat system, this debt-based system is the problem. This never-ending debasement, like I said, the leverage in the system. So I became a gold bug. I'm listening to Mike Maloney and Peter Schiff and those guys. And I was like a lot of people, still had PTSD from the 2008 great financial crash. And as things started going again, I started investing into investment newsletters, research newsletters, trying to get to understand the markets better and how they worked and how different parts of the market, different assets work together. And I was following a newsletter from it's called Sovereign Man. And it was all about having like this flag theory. So like you wouldn't put all your money in one stock. Why do you have your whole life in one country? If money's digital, why do you need your money in the US banking system? That could still collapse. It never got fixed from 2008. It's only worse than it was before. And so I started buying into that theory, which I still am. And I was in the process of going through one of his attorneys to get a trust set up in Panama so I could get a bank account set up in Panama and I could start working on a residency program and citizenship eventually. That was in 2015. And when I took, so I'm going down this path and Bitcoin came across my plate again. I'd seen Bitcoin in 2013, being a tech guy, an investor guy, kind of came across my plate, didn't really pay it any attention. I was watching it run up to about $1,000 and it collapsed and I kind of forgot about it. In 2015, it kind of came across my plate again. And it was at the time I was trying to set up this account in Panama. And I just realized this is actually what I'm trying to do, which is trying to move money out of the US banking system. So it's like, well, I don't need to go to Panama. I'll just buy Bitcoin. And so I did. That's when I started in 2015. Like with most people, once you start putting some money into it, then your attention starts to follow. So now it's like, okay, well, now I got this. Like, what is it really? What are we doing here? What is this really going to do? How does this work? I think I grasped it at that point a little bit easier than I see people grasping it today because I was very clear on the problem. So for me, the problem was fiat. The problem was debt-based monetary system. The problem was debasement. And only once you are clear on the problem can you understand a solution. So then when I saw the solution, it made sense to me. And I'm like, oh, this is perfect, exactly what we need. And I was also very freedom-minded, a freedom maximalist, as I would call myself. And all of a sudden I started realizing, well, wait a minute, this is actually a tool that we can change the world with. Like this we can win with this. And so I realized I have to go tell everybody about it, and I've been making content ever since. But
yeah, you have a great channel. I'm a subscriber to your channel. And just for the new folks, because I know we've had hundreds of thousands of new subscribers in the last year, what is Bitcoin and why is it the solution?
Yeah. I mean, I would love to answer that in 5 minutes for a 5-year-old. Unfortunately, you just can't grasp it that quickly. What happens is with new technology is we try to understand it by comparing it to something that we already know. So like when electricity first came out, we're like, well, it's like a digital candle, which it was, but obviously it became so much more. And so what I'd say with Bitcoin, we compare it to things that we know and understand, but it's so much more than that. But what do we know today? We know that there's Bitcoin, the network, which is a decentralized network, which is something we've never seen before. It is the most secure computer network in the history of the world, never been hacked. Over $2 trillion sitting on an open, basically open source, permissionless network database. We also know that the asset Bitcoin that trades on that is a way to store value. It's the best store of value that we've seen over the last 15, 10, 5, 3, 1 year. And we also know that it's a way that we can transmit value, if we call it that. We transmit money. So I could send you Bitcoin, you could send it back. And I try to make it a little bit bigger because I think what we understand as money, what we understand as value, I think those very definitions will be changing in the future. But that's what I'd say Bitcoin is. It's a way that we can store value, typically our wealth, our energy, in a way that can't be debased from money printing, things like that. It can't be seized or stolen. So it's censorship resistant and it's immutable. You can't change it on me. And if I want to send it to you, nobody can stop it, block it, or prevent it. And again, nobody can inflate it away. And the reason why those are important is, again, if you understand the problem. So the problem is that the governments continue to print an endless amount of money. And I say all the governments. The United States is maybe not even as bad as some of the other countries, like we see what's going on in China, for example. So the countries are constantly debasing the currency, inflating it away. So it protects us from that. We also know that nations around the world are continuing to become more authoritarian. The United States has gone a little bit down a different road lately, so we're very thankful for that. But obviously there's North Korea and there's Afghanistan and there's still China trying to ban it. And so as nations want to become more authoritarian, they want to censor transactions, limit our ability to spend money, transfer value and things like that. So that's what Bitcoin is.
Bitcoin's already over $100,000. I wish I would have found it at 100 or 1,000. Am I too late for Bitcoin?
Yeah, it's a great question. What's interesting is that we say that markets are discounting mechanisms. So markets are a way for us to buy something cheaper today than we think it's in the future. So when you buy Apple, Google, Tesla, etc., you're buying it today in hopes that it will be worth more in the future. So you're buying it on a discount to its future cash flows. You're buying it on a PE ratio, a discount to where it'll trade or be valued in the future. But for some reason, people ask this question about Bitcoin, like, but what was it in the past? You don't ask that about Apple or Tesla or Google. So I don't really understand this fascination with it. Obviously, because of the fast rise, people think they missed it. But instead of investing through the rear view, we want to think in the windshield. So the question is, just like Apple, Tesla, or Google, what will it be valued in the future? That's the better question to ask. And so certainly, sure, we all would have loved to buy it at 10 cents or $10 or $10,000. But what I would say from somebody who started buying it at $300, it's a better entry today at 112 or 15,000. And what do I mean by that? Amateurs think about how much money they can make when they buy something. Professional investors always think about the downside or the risk-adjusted entry. The very definition of a hedge fund is to hedge all our positions. So a hedge fund would never take a position without a predefined loss or risk on it. So we think about things in terms of risk adjusted, right? So a professional investor, a money manager, a fund advisor would think about, I take with things that have a high risk and high reward, I do smaller allocations, and things that are safer, I do bigger allocations, obviously, right? So when Bitcoin was $300 and I got in, like, what an amazing entry, except for what the heck was this? How much risk am I taking? Put a couple $100 in, put a couple $1,000 in, right? Today, pretty much all the risk has been taken away. I mean, now we have the president of the United States buying it. So all those risks that we thought, the competition from L1s is gone. The government's going to make it illegal. That's gone. It's withstood forks. It's withstood all types of regulatory battles. And so most of the risk is gone at this point. So now instead of thousands of dollars, I can put in millions of dollars. I can put in billions of dollars if you have that kind of money. And so from a risk adjusted standpoint, I can put way more money into it, but at the same time, we still have so much upside available to us. So, I could give you the case. Well, I'm sure we can run through the math of, I think it can do a 10x in the next 5 years. So to have the ability to have a 10x in front in that sort of a time period, 100x, 1,000x into the future, to have that upside, but with almost all the risk gone, allows me to go much bigger. So then I get a much bigger outsized return for my overall portfolio. So that's why I think it's a better entry today than it was even back in 2015.
Bitcoin can 10x in 10 years. Why? Because it's like a gold, and that's where gold's market cap is.
5 years, I said.
5 years.
Yeah. So what happens is, I mean, there's a whole bunch of ways that we can look at this, and so we want to try to understand where it's going from a bunch of different lenses. But overall, what we have to understand, the main driver for assets going up, when we think about the world getting more expensive and asset prices going up, it's actually that our dollar's value is going down. So I talked about the problem being the debt-based monetary system and the endless debasement. So every time they print a dollar, it buys you less. Let's think about it this way. If I had a business that was worth $1 million and you invested $100,000 into my business, you now own 10%. If I grow that $1 million business to a $100 million business, your 10% grows in value, unless I dilute you by adding more shares of stock. So the same is true, right? We don't want money. Money is not wealth. Goods and services is wealth. What we want is the things that money buys us, the goods and services. So really what we have is all the wealth of the world, the buildings and the technology and the cars and all of that, the food, divided by all the money. So your $1 equals a unit, a fraction of all the wealth in the world. So every time one new dollar is added to the system, your $1 is worth less on a percentage basis. So what happens is we have to understand that mechanism. So as they continue to print more money, it pushes up all the asset prices. You can look at, in the United States, the S&P 500 and the U.S. median real estate is almost a perfect proxy for the M2 money supply, the global M2 money supply. So as the money supply increases, the S&P 500 and the US median real estate move up at about the same rate. Now, not all assets move up at the same rate. Some are more sensitive to that liquidity. So for example, Bitcoin is about an 8.9 times sensitivity to money supply, global liquidity. Gold is about a 1.5 times. So they move at different rates. Why? Well, Bitcoin is scarce. There's only 21 million, right? So it's a much smaller asset. It's much more sensitive to that. And so what we can do is we can go, okay, we have what we call store of value assets. So after we make money and we hopefully make more than we consume or spend, we save it somewhere. And typically we would save it in what we call store of value assets, which would be stocks, equities, that'd be bonds, that'd be real estate, that'd be cash, that'd be collectibles, fine art, that'd be gold, etc. That store of value assets, that basket of store of value assets, currently today in 2025 is worth about $1,000 trillion, about a quadrillion. Now, as they continue printing more money, that basket gets bigger. Let's just go back through some math. So in 2010, that basket was worth about 300 trillion. In 2020, that basket was worth about, I think it was about 500 or 600 trillion. By 2024, it was worth about 900 trillion. Today, it's worth about a quadrillion. By 2030, that should be worth about 1.6 quadrillion. Where do I come up with that number? Well, one, that was history. But where do we come up with that number in the future? The government, the US government, the CBO, Congressional Budget Office, lays out the budget for the next 30 years. So through 2054, they tell us what the debt will be, what the deficit spending will be, what the budget will be. So we can see what they're projected, and I say projected because they always overshoot the number, but what their projected rate of debasement will be for the next 30 years. So assuming that we continue at this rate that they're projecting, then we can see where the money supply will be and where those store of value assets will go. 1.6 quadrillion by 2030, 3.5 quadrillion by 2040, which sounds insane. Now, we have to understand that not every asset in that basket moves at the same rate because some are more sensitive than others. So, for example, gold's going up at 5 or 6% a year. Bitcoin's going up at 50% a year, right? Because of the sensitivity ratio. So we know that the basket in 2030 will be 1.6 quadrillion. Well, we don't know, but based off of the rate, based off of historical numbers, based off of what the government projects that they'll continue to increase the money supply, it should be around that level. And at the rate of Bitcoin's sensitivity to that liquidity, it should push it up to about $1 million per Bitcoin, right? That's that capture about 1.25% of the global store of value basket, 1.25%. That would put it on par to be $21 trillion. That'd be about on par with gold at that point.
Is that why we're seeing all these publicly traded companies like massively start to accumulate?
That's not why, but it's certainly part of it, right? So I think what happened is, Michael Saylor basically put a global bid under Bitcoin and started a race. Now, a lot of people want to call it digital gold, and so people want to call it like a gold rush, if you will, right? I think people have woken up to how valuable it is and how scarce it is at the same time. And so, just like in the gold rush, it's a rush to go get as much as you can. And we just saw the president of the United States, through his company, Trump Media, which he owns over 50% of, just bought $2 billion worth of Bitcoin. Was that like 3 or 4 weeks ago now? Howard Lutnick, his Secretary of Commerce, through his company Cantor Fitzgerald, and his son now, who's running the company and their companies, have invested almost $10 billion into Bitcoin. And so we have this bid. Everybody's recognizing that there's this, like I said, gold rush, if you will. And Michael Saylor sort of pioneered this way to use public credit and equity markets to start buying as much Bitcoin as you can. I think he's got, I don't know where it's at today, 650,000, 680,000 Bitcoin, something like that. And so that it seemed like a pretty good model. We saw MetaPlanet was the second company that started to do that. And by leveraging the markets in Japan to buy Bitcoin, now they're somewhere, I don't know, 14, 15,000 Bitcoin. Their stock was the best performing stock in the entire world last year. And so then, of course, other companies want to do it. And now we're starting to see, I think there's somewhere between 170, 180 publicly traded companies now that are going and rushing in to buy Bitcoin.
Mark, I hate to give you such a basic question, but I'm generally interested. Would you give me top 5 Bitcoin treasury companies? Obviously, Michael Saylor's is number one, pristine. And then,
Yeah.
but how do you think about it? What makes a
Yeah.
good Bitcoin treasury company?
So I think in order to understand what a good treasury company is, I would say for me, I would say, what is the one that can grow the biggest, has the best value proposition? So from an investor lens, we have to think a little bit longer term. So I have a venture fund. I'm a partner at a venture fund called the Bitcoin Opportunity Fund. We've been deploying capital for several years into the Bitcoin ecosystem, into businesses building on and around the ecosystem. Now, a lot of times when you're investing into venture capital, the money's locked up 7 years, 10 years, because you have to allow that company to grow, develop market share, and eventually go public or have some sort of liquidity event. So I typically think in terms of 5 years plus. Michael Saylor thinks in terms of 10 years plus. And so if we think about what is the long-term play here, well, if Bitcoin can get to $1 million, which I think it can, obviously, I think it'll be, I didn't finish the math, I think it'll be worth about 14 million by 2040. Now, if I could put 1,000 Bitcoin on my balance sheet and in 15 years, they're worth 10, $15 million each, right? So, but what's the actual business model here? Michael Saylor calls it the durable business model. So what Michael Saylor has shown us that he can do, he's now changed his company to the strategy, is we take Bitcoin, which is a commodity, and we use it as backing to make credit and equity instruments for traditional finance to tap into. That is the durable business model. So he's taking on tranches. He just took a $2.5 billion tranche for his new asset called Stretch, STRC, and he bought more Bitcoin with it. So I think, to answer your question on what are the top 5 companies, which ones can get to that level? So there's a lot of companies that have popped up in the last several months that have grown rapidly. We're talking thousands of percent gains. But some of them may never be able to achieve that type of scale. So while they'll run super fast and hot, and they could be a good short-term trade, I don't think they're the long-term investment plays, if you will. So if I was going to break this down, I think there's 3 types of Bitcoin treasury companies. So you have type number 1, which is like a micro strategy. And this would be, actually, let's start with the third type. So I would say it's a Bitcoin allocation. So I'm Tesla. Obviously, my business is making cars. And we'll take a percentage of our treasury and we'll put that into Bitcoin. So I have an allocation to it. I'm not really a Bitcoin treasury strategy company. I just have an allocation to Bitcoin. Level 2 is I'm like a hybrid. So I would put this to be like a similar scientific. So I'm a medical company. I do medical technologies. And we're also running a Bitcoin treasury strategy at the same time. So they've acquired a massive amount of Bitcoin. And then the level 3 would be like a pure play. So where the Bitcoin treasury strategy is the company. So if I'm evaluating what the top 5 are, certainly there's MicroStrategy at the top, number 1. Certainly number 2 is Metaplanet. And the reason why Metaplanet's number 2 is they're the longest one running the strategy, but most importantly, they're the first person to duplicate the strategy, but they're the first person to get to this level 2 where they're launching these preferred instruments into the space. So they're the first person who've, what I would say, have achieved escape velocity. They've built the Bitcoin stack large enough to now start selling debt and equity instruments off of it. So certainly they're number 2. Then we have to get into who are the 3, 4, and 5 players there. Nobody else has achieved it yet. So who's going to be closest, most able to do that? You know, we have ones that are pretty exciting. I would say certainly like the one Jack Mallers is a part of, backed by Cantor Fitzgerald, has deep, deep, deep institutional pockets. They have an enormous amount of Bitcoin, massive ties into Wall Street and finance. So I'm guessing they're going to use that stack to do pretty well. I think over the long term, they'll do pretty well. I think, Pomp just launched one. They got I think it was the largest raise, $1 billion, an enormous amount of Bitcoin. Palm's super smart. I'm sure they'll probably do pretty good. So those are a couple of really big ones. Obviously, David Bailey, Bitcoin Magazine, they launched one called Nakamoto. Their fund, UTXO Management, as a hedge fund, has basically seeded and launched almost all of these, and they've done amazingly well, like crushed every other fund out there. I would imagine they'll do pretty good. I recently joined one that just launched called Satsuma in the UK. We just had the largest raise in the UK, one of the top equity raises for a Bitcoin Treasury strategy company. We started with an enormous base. I think we're going to do pretty good. But what I would say is that I think a lot of people think that there's only going to be one, like it's a winner take all event. And I just don't think that's the case. As I said, the long-term durable business model here is to be able to launch Bitcoin-backed credit and equity instruments into the market, financial products. In the United States alone, we have 3,900 ETFs. Those are all financial products. We have over 4,000 different types of bonds, corporate bonds and junk bonds. So tens of thousands of financial instruments. So I think we can have thousands of these companies each creating their own financial instruments. So I think there's a lot of room and we're just getting started.
And when you see copycats for other altcoins like Tom Lee, Ethereum Treasury companies, do you view that as doomed to fail, or do you view that as, well, that's going after a smaller potential market cap? They're going after different things. That's not store value. That's not money. They'll be something else.
The question I would have with Tom Lee doing Ethereum, which by the way, congratulations, he crushed it on that one. An enormous launch. What we don't know yet for Ethereum, there's a couple of question marks. Number one, there is no long-term sustained bid. So with Bitcoin, as I kind of already laid out with Cantor Fitzgerald and President Trump and the Treasury companies, like there's an enormous bid trying to acquire as much Bitcoin as possible. And we don't see that yet in the Ethereum space. Tom certainly did, but we haven't yet seen the demand pick up. So once his buys have tapered down, he started liquidating his stock. He liquidated or diluted his shareholders 5,200%. Selling the stock into the market. They had a 30 times multiple to their net asset valuation, and he sold it all the way down to a 1 times. Just diluted the heck out of everybody, but he got all the Ethereum. But now that you're sort of out of the gunpowder, now that you're sort of dry, is there going to be that continued sustained bid? So we'll have to see. The other thing that is said to be seen about Ethereum is, while the Ethereum diehards love to say that they have a lower inflation rate than Bitcoin does right now. The problem that we can point back to is that the monetary supply and issuance has been changed multiple times in the last several years. So it certainly has a lower inflation rate today based off of the last change, but what does that mean for the future? And so I think those two things are said to be seen, and we'll see how that plays out.
Speaking on crypto Twitter or just looking at the community, the biggest potential bubble warning that's a big unknown sort of is these crypto treasury companies. If a bubble would happen, do you think it will, and how would that happen?
Yeah, I mean, I think everything's always a bubble. It's just that what stage of the bubble are we in, right? How high is that bubble? But I would say that as far as Bitcoin treasury companies, I don't think we're anywhere near a bubble. As a matter of fact, I would go as far as to say they might be some of the safest plays out there for traditional investors. And here's why I would say that. So again, as a venture capital investor, we're investing into private round deals that may not go public for 6, 7, 8, 10 years. And you invest through all the early rounds, then they have a pre-IPO. And then as soon as there's liquidity available, the insiders want to get the liquidity. They want to dump their shares on retail, right? So we see this all the time. As soon as retail gets into a stock, a publicly traded company, there's usually a dump because that pre-IPO money, the early money sells. We saw the same thing in the ICO space, right? The early insiders, as soon as it's unlocked, they dump on the market. And that's just the way the markets work. And a lot of these Bitcoin treasury companies have worked some sort of the same way. So there's liquidity in the market. The premium runs up and then the insiders dump their shares and it drops. But here's why I think these are some of the safest, because similar to an ICO phase or something like that, the difference is that with these treasury companies, they bought the Bitcoin. Now, obviously, you have to be a believer in Bitcoin for this to make sense, as I am. But these companies have bought the Bitcoin. So let's just say hypothetically that the premium went high. They're trading at 6 times, 7, 8 times their net asset value, an MNAV, multiple to the net asset value. So let's say they're trading 6, 7 times. And I bought it at that level, but it drops all the way down to a 2 or a 3. It's like buying a stock at a high PE ratio and then the PE ratio collapses. So I bought it at a high premium and then the premium dropped. So I'm down in fiat terms, right? The price of the stock is less than what I paid for it. But they bought the Bitcoin. So, whatever, they have 1,000 Bitcoin now. Let's just say hypothetically that they can never buy another Bitcoin. They can never raise any more money. They got all the money they could. No one will talk to them anymore. They're stuck. The business is stuck. I bought it at a high stock price. Now it's a low stock price, and they're done. But they own 1,000 Bitcoin, and in 5 years that puts them at $1 billion valuation. You know how many companies ever become a unicorn? It's like 0.002. So if I believe in Bitcoin and if I just wait for 5 years, that valuation is going to come around. And so that's why I think it's safer than like an ICO where it was some anonymous founder where, potentially I ended up with vaporware and tokens that never really got built out, no ecosystem for them, and they basically went down to zero. Instead, the company has Bitcoin. Now, certainly there could be fraud that could happen and things like that, but because these are regulated entities, publicly traded entities, there's a lot of transparency. I think the risk there is pretty relatively low. So I think they're safer, I should say safer than most of those other investments for that reason. And I don't see a big bubble forming right now.
The only way I could see a bubble for me is like you don't have to worry about Jack or Pomp or Sailor because if things get bad, they're not going to sell. They know how to talk to their people, but it's like the people that aren't as big of believers and say it gets a negative, or Bitcoin just going down for 8 months and then they need to sell. They think they do. We don't see that now with the Bitcoin treasury companies, but that's how I would see a bubble.
Yeah, and it certainly could happen that way. So one thing, we saw Saylor withstand the storm back in 2022, but the first thing that he did back in 2020, when he started buying Bitcoin, is he gave all the investors an out. This is where we're going. This is what we're doing. This is the future that we have. And if you don't like it, we'll buy you out. You can get out. And what he did is he aligned the company, the board himself, the board and the shareholders in this vision. And so that gives them that strength to withstand this. Now, to your point, we get a big drawdown, potentially it's going to come in a 4-year cycle. We get a big drawdown. You can't raise money. And some of the board, some of the big investors start grumbling and fighting. I mean, it could potentially cause something like that. It certainly could. I know in our company, we've tried to align the business so that won't happen. But another big risk I would say that a lot of people think, and they think this because of what happened with Saylor, is he used debt, convertible debt, to buy Bitcoin in the beginning, right? Billions of dollars of debt. And so the questions were always like, well, what if he can't cover the payments on the debt? What if the debt comes due and Bitcoin's down? Is he going to be forced to liquidate? At what price will he be forced to liquidate? And there was all this narrative going around. Of course, none of that was true. He wasn't forced to liquidate anything. But what we could see is that sort of the game is to use some sort of leverage to get Bitcoin. Leverage can be dangerous. We know that humans have a tendency to take things too far. And we know that some small companies are going to try to grow too aggressively, and they're probably going to take on too much leverage. And they could, for example, and we've seen some companies do this, when Saylor took on debt, he would take on debt with a 5-year term. Well, that gets me past a 4-year cycle, and it would be tranched out. So like no big chunk will be due at any given time. But we've seen some companies recently take on like 12-month debt. And it's like, well, 12 months from now, we could be in a bear market. That could be the worst possible time. So I think there could be some companies that could make some decisions like that could put themselves into more risk than others. Categorically, for the space, I haven't seen that yet. I don't think it's built up in the system yet. Even if you took, most of these companies and liquidated them, it's not even that big of a deal. You saw a few weeks ago, Galaxy did that big trade for a Bitcoin OG. Was it 80,000 Bitcoin?
Something
I think
like
it was.
that.
Yeah. I mean, you could obviously not MicroStrategy, but all the other ones, you could just liquidate them at once and it wouldn't be that big of a deal. So the market can handle it. So I don't see the system or the risk built up that much right now.
Final few questions, then I'll let you go. Let's just say that I'm not a no coiner. I already have a Bitcoin position. You always want more Bitcoin, but I have Bitcoin but now I have an extra $120,000. Would you
Yeah.
put it buy one full Bitcoin or put it in MicroStrategy? What's going to perform better?
Yeah. So I think over a long enough time frame, I would think MicroStrategy would outperform Bitcoin over a long enough time frame. And the reason why is because they're using intelligent leverage to lever up the returns of Bitcoin. That being said, if I'm well, you said I'm not a no coiner, so I already have some coins. So it depends on what the position is. But what I would say is buying Bitcoin treasury companies like MicroStrategy are not a replacement for buying Bitcoin and put it into cold storage. Everyone should start there. But what happens is after we've saved enough, after our future is somewhat secured, then there's typically room in the portfolio for a little bit of risk. So now I've got I've got my pyramid base built in Bitcoin. And then, maybe I'll put a little bit of allocation to MicroStrategy. Maybe I'll put a little bit more of a risk allocation towards Metaplanet or something like that. But it's certainly not a replacement for Bitcoin. Certainly you should buy that, put it into cold storage first, and then think about putting a little bit of risk into your portfolio.
If Bitcoin gets to $1 million in 5 years, where could that put the price of MicroStrategy?
Yeah, it's a good question. I think, I mean, historically, MicroStrategy is doing about 2x what Bitcoin is. Right? So it's twice as volatile. So as of right now, over the last 12 months, year over year, the S&P 500 is up 15%. Bitcoin is up 90%, and MicroStrategy is up 166% year over year. So it's about 2 times. So assuming Bitcoin 10x's, that could put MicroStrategy at about a 20x.
Crazy.
It's crazy.
I know. Saw you did a video and you put something like 1,600.
Yeah, and so we were using a couple different ways to look at that, right? So we were looking at like Fibonacci lines, where that could put it. We were looking at the relationship of MicroStrategy to Bitcoin. So I like to try to understand things from a number of angles. And yeah, that wasn't in 5 years. That was at the end of this market cycle. So in that video, we were trying to look at, I think, 4 or 5 different types of indicators to see where Bitcoin could end up at the end of this cycle. And it's somewhere in the 140 to 220 range. So it's like a 170 is kind of like the median based off of all these indicators that we looked at, about 170 for Bitcoin in this cycle. And then based off the relationship of Bitcoin to MicroStrategy and using the other indicators, that would put MicroStrategy somewhere around 1600, which is about a 3x from here. So Bitcoin could potentially 2x and MicroStrategy could potentially 3x.
By the end of 2025.
By the end of the cycle. Now, we don't know when the end of the cycle will be because a lot of people think it has to do with the date, but it's typically more about market structure. So when you go back and you look at the different cycles that Bitcoin has gone through, which we don't have that many, it's a range. It's not an exact date or a time frame. And so really there's market factors that make this up. And so the end of this cycle should probably be Q4 of this year to potentially Q1 of next year. The problem is that a lot of these indicators are moving averages. So that means they're moving. So as of right now, for example, the Pi cycle top indicator, which has been the most reliable indicator, very, very reliable. As of right now, it's putting the cycle top into 2027. But that's probably way too long. But if we go on a pretty quick, aggressive bull run in Bitcoin, then that moving average will come forward. So I would say sometime, Q4 of this year to Q1 of next year looks like the most probable top in the cycle. That being said, I have kind of 2 contrarian takes here. Number one, I do think that the 4-year cycles are still intact until proven otherwise. However, I don't think they'll be near as severe as most people expect them to be. So what we can see is since the ETFs were announced, if you look at a chart, you'll see how volatile Bitcoin has been historically. And then right when ETFs were announced, the volatility has been stripped out of Bitcoin. We're not seeing the explosive big candles to the upside or to the downside. We haven't, we're used to seeing Bitcoin drop 25, 30% pretty regularly, and we haven't seen any of that. Also with MicroStrategy and these other treasury companies and the ETF setting this bid, it's protected it from the downside, like when Galaxy dumped that, 80,000 Bitcoin into the ecosystem in a single day, right? It can absorb that because there's that sustained bid there. So I think there's a good argument. I think it's my base case to think that we don't see another big drawdown in Bitcoin, not another 80%. Maybe it's more like a 40 or 50% sort of at worst. Another reason why I would say maybe the halving cycle itself isn't really going to be in the driver's seat anymore is typically you would imagine, price or economics 101 is prices supply and demand. So if you have the supply here and the demand is equilibrium, if the supply gets cut in half, obviously the price goes up. But right now, between the sustained bid of the treasury companies, the ETFs, et cetera, we're buying typically 5 times more Bitcoin than what is being produced. So the demand is way outstripping the supply. So if you cut the supply down, it has negligible effect over the supply demand characteristics. So even if we cut the supply, well, not if, when the supply gets cut in half through the halving, it's not going to have as big as an effect as it used to have when it was a much bigger deal. So I think those two characteristics have really changed it. The third characteristic is I started talking about really what's in the driver's seat is global liquidity. And so then we have to look at what's going to happen with global liquidity. What's going to happen with the US? Well, we know right now Trump has been banging on Jerome Powell to lower rates. He hasn't quite been able to get him to do that yet. So the US has been sort of holding back some of the global liquidity flows. But if you look at the global liquidity flows, my favorite to follow is Michael Howell. He's the GOAT. The Bitcoin layer, Nick Badia, those guys do a good job. Raul Paul, Real Vision's got a real good forecast on that. But if you look at the global liquidity, we are still breaking out to new all-time highs right now. China has been easing like crazy, but Jerome Powell and the Fed haven't really come around yet. And, as much as Trump has tried to get him to come along, calling him all types of names, too late, et cetera, he hasn't been able to get him to move. Now, we'll see what happens at this next meeting that's coming up here shortly. Will he lower rates? How aggressive will they be? Some of the Fed chairs say maybe 2 or 3 cuts still this year. We know Jerome Powell leaves office next year and Trump will replace him with somebody willing to bring rates. Trump wants them down by 3.5 points. I'm guessing whether we see Jerome Powell start lowering rates a little bit now, once Trump can replace Powell, we're going to really see some aggressive easing. And so what this does is it pushes this global liquidity out. So instead of ending Q4 this year, like has been on the cycle, we could see liquidity actually start to accelerate going into Q1, Q2 of next year. And that could push these cycles out to, who knows how far.
Mark, love the perspective. Always more to talk about. I want to have you back, beginning next year, revisit some of this stuff.
Yeah.
But just final thoughts for the Altcoin Daily Army.
Yeah. My final thoughts are zoom out. That's my final thoughts. What happens is you drive yourself crazy trying to understand flows on weeks and months. But when you look at years, they start becoming very clear. I don't know what's going to happen with rates over the next couple of months. I'm pretty sure where they're going to be a year from now. So I'd say zoom out, focus on that. It's a much smoother ride that way.